Hey, we're live, and it is February 1st. Welcome to the first day of the shortest month of the year, short trading month. The expiry, I think, is 24th, if I'm not mistaken, the monthly expiry. Please let me know if you can hear me. I'm assuming everyone can, otherwise I'll start to hear lots of complaints. Hello, Vladimir. Andre, yes, we got lots of people still coming in. Great. Interesting thing about February 1st is back in like 72 or 1974 or something, the first handheld scientific calculator hit the market. Was like, I think HP, Hewlett Packard put it out. It was like $400. Can you imagine paying $400 for a handheld scientific calculator? Back in the 70s, I mean, that was a lot of money then, right? I suppose it's still a lot of money now. A lot of money then. So interesting how far we've come. And then we've got, this little thing in our pocket. Everyone has one, which is a million times more powerful. So good stuff. Yes, thank you, Soren, for letting me know it sounds okay. Stan from Amsterdam. Excellent. I can see Richard hasn't joined me yet, so I don't know where he is. Richard has gone a bit AWOL. I saw him this morning. I was at the office. I had to come home. My daughter was feeling unwell, so I'm going to do this from home. And I assume Richard, I hope nothing bad happened to him. I assume he'll be joining us soon. If not, we'll just forge on without him. We've got some interesting stuff to talk about. Got some interesting market dynamics too. I think it's been very good trading in general, at least for the style of trading that I often employ. Not always, but for some of the accounts that I manage, it's been very good trading. If you're trading breakouts and stuff, kind of sitting because we're sitting in a channel. But we'll get into all that stuff. We'll look at the charts in just a few minutes. So I think we're probably ready to rock and roll right now. Let me just head over to. Over here to the chat. And just as a reminder, please, and I put it in the chat, if you do have any questions about what we're talking about, feel free to enter it into the Q&A section just to keep it a little bit more organized for us. That would be fantastic. So let's carry on. All right, so today's agenda, as always, we're going to take a look at the market. What's going on in the market, kind of a macro view and kind of how we feel. We'll look at some of our current trade strategies. I'll bring up my charts so I've got going on. I try to put only trades from my discretionary accounts in here so that there's some context and continuity to them, because there's no point in putting a heavily managed book in there, which is just, managing the metrics versus trying to manage trades. And then the topic, we're going to talk about 1x2 spreads in a trending market. I love this trade. In fact, I put one on maybe on Monday, I think I did. On February 9th, it was a 1x2 call spread. But I'll talk about that, and I'll talk about why I love to do those spreads, especially when the market is trending. I find that it works very, very well. And finally here, just before we get started, I'm Shane Oglow from Roguetrader.academy. My partner Richard is usually with me. We've been trading for a long, long time. You can visit us at Roguetrader.academy. If anyone who's silver level and higher, basically silver level is where we interact. We've got a weekly call, Ask Me Anything call. We've got our live alerts channel where we post our discretionary trades and we can interact. People can ask questions in there. Access to all the educational content, of course, and our daily live stream. We do at least one live stream every weekday, sometimes more, sometimes on the weekend if the conditions warrant it. And you can always check us out on Patreon and soon coming OnlyFans. I know I've been saying that for like a month now, but it's taking forever to get account approval. Something weird is going on over there. So without further ado, maybe let me head over to my charts and yeah. Sorry, just give me a second here as I deal with on my own. Okay, let me share my screen here. Window and charts. All right, so what do we got up first? I'm assuming everyone can see this. ETH. Well, all I had on was this short 26 Jan 2100 puts. Obviously, that's gone. That expired worthlessly, or I think I took it out at next to nothing. I don't have anything going on in ETH lately. I was trading ETH very heavily most of 2023, certainly up until the end of the summer. but I just found that it wasn't nearly as profitable for some reason as Bitcoin. Sometimes it had higher IV. And I found that over the years of trading. So when I was trading equities really, really heavily, I'd have 3, 4, maybe sometimes 5 stocks that I would commonly trade, usually 2 or 3. And sometimes I'd trade those for 6, 7 months straight, almost exclusively. And you found, and other traders on the floor will be trading other things or same things, and sometimes I'd jump over the things that they were trading. I could just never get it to jive. It was just hit or miss. And ETH seems to me to be that kind of an asset where I just can't get in the right sync, at least compared to Bitcoin. I find I'm much more profitable with Bitcoin. So I'm not taking that many ETH trades. Now, I think the ETH will have its day. I think that we're all sort of anticipating, ETF news to come out for ETH, just like we went through with Bitcoin. And we're probably going to see a lot of volatility, and I think there'll be some great trading in there. But for right now, I'm not doing too much in ETH. If ETH wants to move 5-10%, and I'm assuming if that happens, Bitcoin will be doing it, unless it's ETH-specific news, then of course I'm going to jump into it. Let's go over to Bitcoin. Something a little bit new today, something a little bit different. And this is something I do. I haven't done for members so much. I did for some internal groups where we're working together. And basically, I'll give them 2 scenarios. So literally, one of the members said here, they said, Shane, where are we going from here? I said, this is what's going to happen with the market. I said, we're either going to break up, and this is the price action we're going to see, or we're going to break down, and this is the price action we're going to see. And so far, it's like exact, right? Exact. Now, obviously, I can't forecast this out 3 months or 6 months or anything crazy. But for the kind of the initial week or two, generally, I'm quite right. Now, could this just come down here and just hug the bottom of the range and then go up? Yeah, for sure. But oftentimes, we go down to the bottom of the range, we'll see a little wick through like this. We'll see it plunge through, just to scare the pants off people and to, trigger orders and stuff. And if it does go down, I don't anticipate it really falling too much below the high 30s. Why? Because we have the invisible hand of Larry. And what I'm talking about is Fidelity, and I'm talking about these funds. Now, some of the funds like ARK, they aren't investing all that much in Bitcoin comparatively to like what BlackRock is doing. So when we think about that, we know there's inflow every day. Now, everybody's been monitoring. This is nothing new. There's nothing, extra cerebral about what I'm saying. As we were monitoring outflows and inflows, outflows from things like Grayscale. We're going to have some outflows coming from the FBI, all those seized Bitcoins, and when they're going to put those in the market, we don't know. That could cause some things to go down. But assuming normal course of operations, is there really a reason right now for Bitcoin to go down? And if it does go down, is it really going to go down a lot? Are we going to see 28 in a flash, in a heartbeat? You got to think the buying operations are to kick in. Every day we know those orders come in the morning and they're executed in the afternoon. The invisible hand kind of supports you. That's why I felt a lot more comfortable lately selling puts or I'll say put spreads, because I always have the cover in place. So if I run in and I'm selling a put, I've already got cover in place, or I'm buying it at the time and doing it as a spread. I haven't been very exotic on my strategies lately. I'm keeping it quite simple. Now, what do I have going on right now? I didn't want to I've got too many positions to put it in. It would just look like there'd be text all over the place. But what I've done is right now here, let me just use like the little paintbrush here. I've got short put strikes starting at 42, short dated, like literally expiring tomorrow, maybe on the weekend, expanding out into maybe 38, let's say, out in time. Now, this isn't accurate on the time scale. Well, maybe it is. Maybe towards the end of the month, maybe I'll have some high 30 short puts. And as I mentioned, I've got all kinds of cover down. I've got cover coming out the yin yang. So if the market wants to take a catastrophic drop, yes, I'll have some pain here. I'll have to adjust or close or take a hit on or roll or whatever I'm going to do, but I'll be making a bomb on those. Same thing on the upside. On the short dated, I have starting at about 44 short calls, going up into the high 40s, low 50s as we get out in time. Okay, so basically I'm creating, I don't know, we could think of a funny name for this. I'll call it the cone of profit, or I don't know, something cool like that. But I'm creating this funnel. Why? Because we're in a channel right now. Also, I do expect a general uptrend, and I love selling calls into an uptrend as long as the uptrend isn't violent and crazy and scares the pants off of you every second day. Let me erase this so it doesn't look like my grade school drawing class. Okay, is this why can't I highlight it and erase it? What? Oh, there we go. Okay, good. Let me erase that. So basically, those are the positions I have on. So I've got short dated stuff, fairly tight in that range. I'm happy to sell that because we could just bounce around this range, and I wouldn't be surprised if we did that. My leaning is, yes, we might have some down movement, but I don't think it'll be long-lived. I think it'll be short-lived, and then we'll move up. So I've just got that cone, and I'm not selling too much further than 30 days out. End of Feb, I think that in some accounts we've got some risk reversals, some short risk reversals going on out into March. But for the most part in this account, I'm just collecting that premium as short dated as possible. I'm just realizing and pushing the intrinsic value. And I'm very, very happy to do so. So that's what I've got going on in Bitcoin. And in fact, what I might do is, I see Richard still hasn't joined us. Let me just, no, he didn't answer me. So something must have happened with him. I hope everything's okay with him. Let me go back to the chat here. Nothing there. Let me stay on the charts for now. I'll always start talking about these 1x2s. So in general, as I mentioned, I love selling calls into an uptrend. Why? Because generally the skew is in your favor, so you're getting a little bit more premium for it. So, it just makes sense to sell calls. Yes, you will get pressured on them sometimes. The market price might come up close to your strike price or go through it and, cause you to manage things. Yeah, that's the life of a trader. Deal with it, whatever. Not a big deal. But if the market's slow enough moving, it's really not a problem. It's nice and easy. It's kind of a gentle way of managing the account, and I really like it. The thing I don't like is I don't like buying options. I don't like buying options. I do it sometimes, and sometimes you can have some great profit on it. But whenever you buy an option, you, of course, have to be right on timing and direction, which is a difficult thing to do consistently. So when we expect the market to go up, let's say we had a big move down. Let's just here. Let me bring up my my chart again. I'm assuming I'm still sharing. Yes, I am. Let's just say we have this big move down. We come down to 38 and it scares the pants off everyone. Well, there's a pretty damn good chance we're going to bounce up. And that's a great time to go at the money or a near the money call looking to make, 500% or something. I love those trades. They have a nice setup, a few times a year, and you can really make some good money. No problem with them. Now that's a scenario where you're looking that elastic is being pulled and you expect it to rebound at least some amount. Fine, that's a more simple concept. But if we're sitting here in this channel and we think, hey, you know what, with everything going on in the world with these ETFs, this, that, the other thing, we expect maybe to be at 50,000, maybe in a month, maybe in 2 months, maybe 60,000, maybe 70,000 by Q2, Q3. Okay, fair enough. How do you play that? If I want to buy the June calls or September calls or something, Jesus, that thing doesn't start moving until July, most of the value is going to be out of the thing, right? So it's a bit disheartening if you're just going long. And what if we stay in a relative, even if we do start going up, but it's doing it at such a slow pace that the time decay is offsetting any intrinsic gains. So it's a little bit of a frustrating experience. And a lot of people stop trading because of that. They think, oh, I just couldn't get it right. I was right on the direction, but the timing just didn't work out. Oh, stupid options. I get that. Or they'll just burn through all kinds of cash waiting for this to happen. So what we like to do instead is not worry about that. If it's going to trend up, we want to sell calls. We also want to make some money from the underlying or from an underlying position, a long position. So that's when I would want to buy a 1x2. So I think I said Feb 9, which is right around here. Let me use my little paintbrush here. So I bought, I think it was a 43.5. So it was, oh my God, I can't, this is not going to work too. Here, let me use the text. And text, hello, there we go. So I bought 5,000 call, right? Long. I'm using my Spanish keyboard, so it's different keys. So, but I got that one right. Anyways, I bought that long. And what I did was I sold, I think they were 46. And I liked 46 because it gets deep up into here. So here, I'll just put this up here. All right. 46,000 calls short. And this is by 2. And the nice thing about this trade is that if the price does appreciate, now this is a short dated one. I thought we were going to go up. It kind of messed it up. I prefer to do these a little bit longer dated. I will set up some probably for the end of the month. And I might even set up some for March. Now, when it comes to, and earlier I said I don't like to sell a month out. Selling, if I'm just selling and collecting premium right now in Bitcoin, I'm not selling out 90 days. I'm not doing anything crazy like that. I'm selling shorter dated because and maybe I'm wrong, but I just feel it's easier. I'd just rather collect that intrinsic value quickly. Now, on the longer dated ones, for longer dated, I don't mind these 1x2s. And the reason why I like this was I don't remember what I paid for this long, but the buy 2 sell more than paid for it. In fact, I made a credit, and I'll almost always do this for a credit. Now, sometimes I'll do it as a small debit or a flat trade. But in this case, if this, let's say it goes down, I'm completely wrong, and it does not appreciate, well, I keep the credit. This expires worthlessly, and I keep the credit from these 2 shorts. I make money from it. I don't care. If it goes up, wonderful. I'm going to make money. And I bought it close to the money at the time. It was near 43.5 when I bought it. So it was at the money or very close to it when I bought it. As long as it doesn't go too far above 46,000, I'm going to be okay. But I actually don't mind if it goes above 46,000 because in my mind, I was going to be selling calls into what I expected to be a price appreciation anyways. So I might as well just keep this long in and let that cook. And then I'll roll out the shorts and I'll probably roll into another 1x2. So I'll keep the 1x2s rolling. Now, let's just say we have a pretty sharp move up and I'm a bit freaked. Well, I'm going to hold on that long. I'll split those 2 shorts. I'll maybe roll one short up to, let's say, 48 or 49 or something, and I'll roll the other one into a short put. So I'll roll it into a strangle. Not always. It just depends on the circumstances. And then I can lay on another 1x2. Let's say over the next 3 months, I keep doing this. This thing just kind of keeps chunking up and chunking up and chunking up. And next thing we know, we're 55,000. Well, I've carried those long and made money on the longs, plus it's deribit. So I own the underlying, right? So that's great. And I just keep managing the calls. It's a lot easier to manage calls than puts in general in my mind. So I love the 1x2 because you're not having to cough up money up front to get into the position. If you're wrong, who cares? Your account's not eroding away. You're actually making money if you can do it for a small credit, or worst case scenario, it's only cost you a little bit or it's a flat trade. But it's something, selling calls into what I think is going to be a slow rally. I don't think that we're always going to see Bitcoin jump to 60,000. I could be wrong, but I don't really expect that. There's no catalyst. There's no reason for that to happen outside of a black swan event. Like all of a sudden China comes online and says they're going to legalize crypto and replace the yuan or something. Okay, fine. All bets are off at that point. And that's also why I always have tail risk on both sides of that bell curve. So that's really why I love 1x2s, and I love just continue rolling them. And if this thing wants to creep its way up, beautiful, because I'm going to make money on the shorts. And I'm going to make money on the long underlying, and it's nicer for your margin too. So that's about it for the 1x2s. I'd love to hear anybody's opinion on it or questions on if they're using 1x2s. If you have any questions about how to manage that 1x2, and there's like with anything in trade, there's no one size fits all. With trading, there's a lot of ways to skin this cat, and we can look at a lot of different options. And usually, it's going to depend upon the market conditions at the time. So let's see. We do have some questions here. So let me just get started with this. Vladimir, let's assume I sold any kind of position, for example, an uncovered call. And let's assume price isn't moving anywhere and time has passed. At which point of time should I buy back my position? I heard advice to buy back when 50% of value lost. What's your advice in this case? Well, that's a good question, and it's completely subjective to the size of the account, how much risk you have on, how long to expiry. There's a lot of strategies out there, and we experiment with some of them too, where we're just all we're doing is selling 3 days, and letting everything expire, rolling things that get into the money or at the money. From the traditional standpoint, if I'm trading the equity markets or I'm trading the S&P, I'm not going to be selling 3-day S&Ps. I'll be selling them 30 days out or 50 days out or 60 days out. When I'm trading those traditional markets, and the IV is not as high, I'm more inclined to put on things as an iron condor, or a covered call. I'm more inclined to do that and have a set formula where I say, look, I get 25% profit on this particular trade. I'm taking out a quarter of it, or a third of it, or half of it, and I'll let the rest ride and see if I can get 50% or 75%. Rarely would I let one of those TradFi positions expire worthlessly, or hoping to let it expire worthlessly. I almost always take it out with a price point. I operate a little bit different in Bitcoin. Now in Bitcoin, I still do put out cheap bids to buy back everything. But if I'm selling shorter dated stuff, I'm more inclined to take near 100%, because of the decay. If I sell something that expires on Sunday, if the market doesn't move, well, on Saturday, it's going to be practically worthless, and I might as well just take that risk off. There's just no point in having that risk out. We've extracted probably 90% of the value out. Just get rid of the damn thing. Get it off the table. Margins happy. You don't have to worry about it when you're sleeping overnight. Now, if we're talking about uncovered versus covered, that's a completely different thing too. Now, when you have a covered call where you're doing iron condors, for example, short iron condors, I will let that ride longer than if it's uncovered, because there's more risk, right? So the higher the risk, the more I am to be more disciplined and take things off the table early. So if it's uncovered, maybe I will take it off at 20% or 25%. I love scaling out of positions. Always have, always will. I also love scaling into positions too, because you just never know. No one's ever going to grab tops and bottoms exactly, certainly not on a consistent basis. So that's my advice in terms of where you might want to cover that. I've got 5 minutes left. Question from Stan. When you roll positions out, do you move them to the same strike or a later date, which would be out? And so later date is out, and then up, if we're talking about a call, would be up. So up and out, or just up, or just out. Anyways, let me finish this question here. So when you roll them, do you move them to the same strike, just to a later date, or a different strike as well? In the latter case, we may miss some on credit, whilst on the former, we can gain more. That depends on the market situation. Yeah, exactly. So when I can, I'll keep the same expiry. So let's say something is coming close to my short puts. I love rolling them to a lower, so I'll roll them down, but not out. Sometimes, in order to get that value back, you're going to have to sell 2 instead of 1, for example. And you have to be okay with that risk. As long as I have coverage down below, I'm okay doing that. I love to try and keep that intrinsic value collected as quickly as possible. I don't want to push it out unless I have to. Now, if you do want to push it out, I'm generally a little bit happier to keep it close to the same strike because you're going to gain more. It's almost always going to be it'll definitely be at a credit. If you're keeping in the same strike and really on time, you're going to be, you got all kinds of time value in there, right? You're going to be collecting that time value. So, I'll roll it out and up or down a bit, depending on the market view. So is there support or resistance at that price level? Has there been quick market action, a quick dump down? You expect a retracement. So you have to kind of configure those things when you're thinking about it. But it's, I think the one rule that I have that I generally try not to break is I always do it for a flat or for a credit. Sometimes, let's just say I had some short puts. The market came down. I was a bit nervous and I didn't want to roll out in time. Well, I could roll down and let's say collect half of that, but I could also sell some calls, turn it into a strangle, and maybe I'll roll that one up and out. Of course, I'll be rolling it up because I'm going from puts to calls, but maybe I'll sell the same day on puts, a little further down, only get half the amount back, but I'll sell some calls 2 or 3 days later or a week later and more than make up for it. So I'll stagger those out depending on the market. If I think it's going to keep going or I think there's a chance it'll keep going, nobody knows for sure, that's what I'll do there. 3 minutes left. Question from Emmanuel. What is the expiration on those options? I assume it was 2 weeks or more. So I think that you're talking about from the chart I'm showing here. So literally from here where I'm talking about the 42,000, those expire tomorrow morning. Those expire tomorrow morning. I don't even know where the market is right now. It's, beautiful, 42,387. Looking pretty good right now. Literally starting tomorrow. Now, I didn't sell those today. I think I sold them yesterday or the day before. But I'll sell short-dated options all the time. It's not something I did in the equities or gold or oil or commodity markets, in the futures markets. I never usually do that. In those markets, the value just isn't there. But in Bitcoin or in Ethereum, when the IV is okay, I love doing that because it's like quick cash. And the decay is obviously so rapid on these things. So I've got them staggered out. 42,000, 41,500, maybe a 40,000, maybe 39s, again, coming down this line. So as you get further out in time, I give it more wiggle room, right? And the premium, I'm not going to say it's the same, but it could be literally practically the same premium collected as you go down this line because you have to factor in the time value. Same thing on the call side. Now, I think tomorrow I might have some 43,000 calls expiring, something like that. But at the moment, it's not in a danger. Of course, that can change in a heartbeat. I got 1 minute left. I do have to keep it to 30 minutes. Question from Core. Yes, I'm trading the 1x2 calls on this market conditions. I expect we range between 40, 50K until June, September. I kind of agree with you, Core. I do think there's a chance we're going to get up in the high 40s and they're going to make a bust through, but I don't think that's going to happen too quick. I wouldn't be surprised if we stay where we are for the next few months at least. I think it's going to be great range trading because we've kind of got that cap in the high 40s. We've got that bottom right now, high 30s. If we did break down and we went into lower 30s, if we look way over left over here, we've got this to rely on. So if I have anything short here, I'm okay to roll it down into here. Now the market can have different ideas for me. I recognize that, but I'm okay. Again, I always have cover. I'm not selling naked, especially puts. Sometimes there'll be some naked calls going there. I'm fine. Well, technically, they might not be naked because I own the underlying, so technically it'd be a covered call. But I almost always have cover on both sides that I pick up cheap, even if it's short-dated cover. Maybe it doesn't match the expiry exactly, right? So calendar, I don't mind that. As long as there's cover there, it keeps the margin engine happy, and it keeps me happy. I can sleep at night. Okay. One quick message here. What if you buy a call that is deep in the money, almost guarantees to be profitable long term? Well, I don't know if it guarantees to be profitable long term. I see you use quotes there, Stan. Good one. You can get into closer to 1 delta stuff on the longs. I just prefer sort of buy the money at the money, but I think that's a preference, Vladimir. No point in saying any opinion when you're completely right. Well, thank you, Vladimir. That's very, very kind. Hey, we've gone a little bit over time. My apologies for my partner, Richard. Obviously, something happened to him. Hope he's okay. Hope he didn't fall down the stairs or something, but I'll have an update on that. Hey, it's been some great trading. Feel free to follow us on Patreon or check out Roguetrader.academy if you want to interact with us daily. Other than that, happy trading, everyone, and I will see you next week.